All right, welcome everyone to Forward Focus. It is July 17th. The summer is halfway over already. Hard to believe that. We are heading into the midway point here. We're right at our midway point in our year, and it's kind of been one of those crazy years. We are going to take a look at what we've got going on different markets here so far this year. So I'm going to start by looking at the overall market. We're going to flip on over here and take a look at our Nasdaq. And I'm going to begin with the bigger time frame. We're basically in a range here today. We've got this trying to do a little bit of an inverse head and shoulders right now. So here's what we've got going on our weekly time frame. And I am going to remove our drawing tools on here. And we're basically in the middle of just one huge impulse move here. And this impulse move is a little bit tricky because we don't have like a big correction in the middle at all. What we have is one wave up. This whole zone is basically a correction. And then this is trying to do second wave up, but it's at the halfway point. So if we look at this first impulse move here and take that halfway point, and then we get the continuation of the impulse move here, we're only right about halfway. So treating this whole thing as a correction. So that means the potential is there for this to go to 100%, but the halfway point is a really key level. It's basically one of those do or die points. So we need to see how long it pauses here. If it pauses for too long, it has a really hard time actually establishing the next segment. So we wouldn't get a measured move as easily if it pauses too long. What you want to see is just basically on the weekly time frame, it would just be a small little kneecap, just a tiny little pause on the way up. So maybe a week or so. You can see in this move up, we had a little bit of a pause right here. Not really anything we can even see though. We don't even have a red bar like we've got here. So this is telling me that the odds of it trying to do that full measured move is lower. It's going to struggle with trying to do it, but it's still something we can't completely rule out right now. I'm going to flip this over here to the daily chart so you guys can see a little bit closer what this looks like. So what we're comparing here is this original move here, and then basically to the breakout continuation here. So I'm looking at this as first correction, second correction in this whole tilted correction. So in another market, this might look like this, where we have just, two main legs up. And it could look like in that halfway point, let me grab my other pen, look like up here, two of correction, and then a continuation. So it's kind of the same idea in here. It's just that it's doing it with a tilted move here instead. So here you can see a little bit more cleanly where that pause was. And notice we're right about that same amount of pause, but it's kind of shifted a little bit there as it hit that 38.2, 50% extension level. So that means that we're basically at a do or die point where if it's going to make it up and do that 100% extension, it would need to do so really darn quickly. And this rounding off here that we had at highs is going to make that more difficult to happen. So it can make this easier for this to pull back and again, make that upside move more of a struggle now at this point. Let's go look at the S&P 500. I'll show you guys how that compares. We're also going to pull up the Russell here in a second. So here is what we're looking at on the ES. So what we're at right now is we're right at this channel break zone from that big ol' megaphone 2T type of pattern over here. Where that broke down, that's our current resistance level here. So this is basically coming up with 1, 2, and then trying to shift here as it's trying to do a third. It's going to be much more difficult for that ES to try to break that previous high. Let's look at the daily. So again, these are our 2 corrections within our trend here. So this is our first leg up. This is kind of the middle leg. And this is going for a third leg. And it's slowing. So with the momentum shift, it's easier for that to turn around. You can see though, there's no real reversal pattern yet here on the daily time frame. So we're seeing a bit of a split between the S&P 500 and the Nasdaq. The S&P 500 has been a lot choppier than the Nasdaq this week. We haven't seen as good intraday trends. Today is starting to get a little bit better, but it's basically showing me that we have the potential for a 2T up there. So with the Nasdaq looking like it could struggle to get another push up, but the S&P looking like it's a high probability, I'm wondering if our S&P here is going to take over in the strength department compared to the Nasdaq over the next couple of weeks. We'll have to see here. I guess, over like the next week and a half to 2 weeks. Nasdaq is trying to round off to pull back up, but the way it tilted off of the highs intraday the other day is just making that more difficult. So you can see here, basically first part of the correction, second part of correction. So that has that room then to go on another strong move here as we head into next week. Let me show you the 240 of the Nasdaq. Well, I got the 60-minute. I'll flip this to the 240. I don't have it. So here's what the struggle is to try to get that going. The way this shifted here basically did a 2T hybrid and plunged. So it's harder for that to get going again on the upside. It's easier for this to go, and we've talked about this over the last couple of days, to go and actually do, another pull coming back into this level. So that is what I'm looking at as we head into early next week. So more difficult time for the Nasdaq. Yeah, exactly, Richie. There's just more room on the ES. It's not going to have to deal with as much resistance. And I think that, with some of the earnings and stuff that we're seeing coming out in the Nasdaq, that's also going to have a bigger impact on the Nasdaq that it's going to do on the ES. So I'm going to flip one of our charts here, and we're going to go look at the Russell. Come back to that Aussie dollar. I've got Tesla open here, so I'm just going to talk about Tesla quick. So we've been talking about Tesla for a while, but if you look at this daily chart here, you see that action right there? It's very similar to what we were just seeing happening on the ES. Let me put that ES up next to it. So what I was talking about on the daily for the ES, move this over here. So see the surge here, the correction, small correction, continuation. That's what we're looking at as the possibility right here on the ES. So basically you're looking at this portion being comparable here. Now, momentum wise, you know, the Tesla surged, so I don't know that we would necessarily get another surge on the ES. It's possible, but the overall pattern, that's the comparison that I'm looking for here. So Tesla pretty extended here. I wouldn't do too much with it. I know a lot of places were increasing their margin requirements on Tesla and everything like that too. So I would not touch it with a 10-foot poker at this point. Let's just leave that one alone. All right, let's go pull up Russell now. So here's what we've got going on the daily on Russell. It came back about 76.4% retracement. Pulled back to the 50%. So this is a typical pullback when you're reacting off of the 76.4 when it's a really strong drop and a pretty strong move back up. So a little bit of a longer correction. Overall, not really anything yet on here to turn the trend around. We're still seeing mostly upside momentum. No momentum shifts here really. We might get a 1, 2, 3 on that daily chart to bring it back up to the 76.4. So one pattern we could watch here is a double tap of the 76.4, and that could pull that back again. So that's what I would be watching on the Russell. By the way, we got a little baby momentum reversal on the Nasdaq underway here. I don't know how many of you are following right now. Can see it on the 5-second chart. You got your 3 highs, 1, 2, 3. It's a little smoother on the tick charts. Scroll over. So this is a version of a momentum reversal. It's not perfect because we don't have deep V's, but we do have the shift. I was watching on a 400 tick on, I had the MNQ in front of me, and it's actually better on the MNQ than it is on the Nasdaq here. But what we've got on a bigger time frame is this inverse head and shoulders here. So this is what we're playing with right now as we're going into this afternoon. And this timing was literally to the minute between the difference between these lows here. So overall, a little bit of a pause there, but the overall bias this afternoon is still on the bullish side here. Which brings me, actually, I want to show the S&P quick. So here's what we were watching on the S&P. We're watching this correction and then this correction. So basically this should have broken down here if it was going to break down. And since it didn't, it actually means, hey, flip your bias, start looking for reversals to head higher. So the way this is formed here, it usually will continue with upside instead. So that goes along with what we were seeing on the daily time frames too. So time development wise, this is the do or die point for the bears, and they just couldn't do it. So that gives the bulls lots of room to try to take back over there. All right, let's go to that Dow here. So we've got a time correction and a price correction. So this will usually go up a little bit more gradual like that and then flip down. So Just like the Russell, I think we've got room to test this zone up here before it tries to flip down. In order to get stronger breakouts, what we would usually see is that these two would be flipped. We would have a price correction and then a time correction, and then it's really easy to get a cleaner continuation. But with it this way, where it's a time correction first and then a price correction, can be more difficult. Sometimes we'll get a good strong move and it'll do a measured move where we get a comparison here to here, but it's a lot more difficult for that to happen. So it's easier for this to go and do a slower move and then break down more quickly. I'm not seeing anything quite yet to bring in a bigger breakdown in the overall market. I think things are kind of on hold. I mean, the general feeling that I'm getting is that people are waiting. Like, we're waiting for something to happen here. Let's go look at some of our Forex pairs. We've been looking at the Aussie dollar a lot lately. So I'm going to pull this up. So one of the things we were looking at with the Aussie dollar was clear that. The way this is looking at on the larger time frames here, so it's the same kind of thing that we were seeing there on the Dow, except more extreme. So here's that correction in the middle. Here's the next pullback. So you can see it's struggling to really get going with a bigger break there. So one thing we were speculating is, can this go and do a 2T on that daily time frame? So I think that possibility is still there. If we look at the 60-minute, we've kind of got this shallow little cup with handle, but it's a really messy one. So it's trying to do a cup with handle. There's nothing that's negated it yet, but it is definitely not the cleanest. Intraday, really good patterns on our 100 tick charts on this one. You can see a nice mega phoenix here, good continuation here. There's still a little bit more room on this 100 tick that this can push to. In fact, if we go up to the 500 tick, this could easily keep going pretty strongly this afternoon because you've got a shallow phoenix that's triggered. So with this break here of this congestion, with the breaking to the upside like that, we've got the room for this to really pick up momentum and keep going. So this afternoon, I would focus predominantly on the upside, and you're going to want to be really careful with anything going against that move. You've got a bigger megaphone reversal pattern over here too. So that's going to make it easier to come back up into that high zone too. I'll do a snapshot of this for you guys, post it in the Telegram channel too. This is a pretty textbook megaphone. You can see our angle on the highs and the lows is pretty good, and then we get the shift here. So the shift led to a phoenix down in here. Your buy is right here originally, and then you can add to it here. And then this whole move now created a shallow phoenix. So let's get that posted in there for you guys to keep an eye on here. By the way, that momentum reversal went with the phoenix on that Nasdaq there a second ago. Let's show you guys this again since we were talking about this here. So here is the momentum reversal, and there's the avalanche. And that is a textbook avalanche, you guys. Look at that two-wave correction there, 1 and 2. You're right at the target zone where your momentum reversal would typically find some support. So little bitty scalp that's going against that bigger trend, but still a little scalp in there for good. Well, this is about 15 points or so from the Phoenix and about 20 from the momentum reversal. But this is a good pattern. We've been talking about Phoenixes and avalanches this week in League of Traders. So I'm going to grab this as an example for you guys. So really textbook two-wave move in there. Oops. Harvey said it was also at 76.4%. Oh, wow, look at that, you guys. Perfect. And then 61.8% here is support. All right, let's go to, I know I'm kind of flipping back and forth here, but hey, we got strategies unfolding, trades unfolding. So again, Aussie dollar, good for more upside. Dollar yen, look at that next. I'm gonna get, let's see here. Kron wanted me to look at RMBL, so I'll get that one loading. And then we'll also get Netflix, which is dealing with earnings here. Netflix has so much competition now. This is one of those little pop things. Notice how this formed down here. You've got basically your momentum reversal and then a shallow phoenix. First low, second low. So if I actually went and got rid of that craziness over there where it dropped, you can see the momentum reversal zone, the two waves up, the two-wave correction with another smaller two-wave in there. And so this is what a shallow phoenix looks like. So just like our Aussie dollar. And that's the same reason looking at Aussie dollar for getting more upside is because of the pattern that was forming. So here, it's right at what would typically be a target level for momentum reversal, which is where that momentum shift starts right here. This looks like something that could be like a pump and dumper type of thing. Intraday concerns me because you can see the shallow avalanche here after the 2T. Let me widen it up so you guys can see that a little bit better. So here's the 2T. It's a 2T hybrid. Kind of slower pullback. 2 waves here. It's basically the inverse of what it was doing on the daily time frame. So this is going to be really hard to come back up at this point. We would need something to round and shift momentum. I think it's easier for this to flush down again before it tries to do that. And then on the daily time frame, because of how this acted at the open, it can be really difficult for that to regain lost ground. So a lot of times what will happen is this can try to pull back in again. And if it's going to hold, it will hold there, but it would need to probably have like a slower start to try to pull back up again. So that's what the technicals would tend to look like here. So you might get like a 2B or something, maybe into 17 or so, that could try to get it to turn around, but we would just have to watch that momentum here because there's just nothing going on right now. Yeah, Quran, it feels like a pump and dump to me. I don't know what it is that is driving this. I'm not familiar with this particular security. Sometimes you know, companies can completely restructure. They could come up with something, you know, completely new and strong, and it can't be like a single focus item though. So if it's just one single focus, that's more pump and dump type of thing. If it has like, you know, multiple things going for it, it's easier for it to go and gain and sustain that move. Again, not a company I know much about, you guys, so you can tell this correction here. These corrections are about the same as that Phoenix, which is perfect. So that's helping, you know, bring that up. A lot of times what can happen with some of these things is, you know, they might go like this, you know, and they'll just kind of keep going down like that. So they'll get pumped and then they'll go back down. And then they get pumped up and then they'll go back down. That's the feel that I have on this right now. Netflix. Wow, look at that, you guys. That is like technically a very perfect exhaustion there. Right smack into the 100%, 2 waves up, 2 waves on the second move up. So here's 2, here's 2. And then how far that pull back, Harvey? One third, yeah. So this is going to be really hard to do any sort of recovery on this. It's more likely to kind of keep slipping down. Let's go look at the bigger time frame. So, I mean, what you had going on here with Netflix is obviously, you know, all the quarantine hysteria, bringing that up here. You got a little bit of a shallow move. If this was going to continue, it should have paused here. Paused here, not pulled back a third of that impulse move. And then those type of things can have continuation momentum because it's basically coming off again here with the shallow. It's building, you've got one correction, you've got 2 corrections. So it would have had to have kept going there. So the fact that this pulled back this much, my guess is it's done. So probably, you know, kind of can slowly creep. You might find like little 2Bs in here that could try to pop it up a little bit again, but I would view this as like a blow off top, and bounces to me, I'd be looking for shorts. Let's see our dollar yen. I always find this action really tricky. And, you know, we've been talking about this for months, how tricky this dollar yen has been. And now the daily is doing like the same thing that that monthly was doing. So a lot of times these can do false breaks one way and break the other. Right now, this looks like it's going to break down. Kind of has like a shallow avalanche feel to it for me. Two waves here, two waves here. It did have the slightly lower low. That's like the main negative here as it went into the second wave because it kind of rounds it off. But it can break that channel there. That could bring in another stronger downside move here. This is just what's throwing it off, this 2B here. Here's the 2B. Then nice two waves up with the Phoenix, nice two waves back down. So kind of It's about the same amount of time correction to prepare to try to break down, but it's trying to do it a little early. Let me show you guys what I mean. So if I put a time extension on here between these two lows, I would like this to have a high somewhere between the 161.8 and 200% for breakdown. It's too early. It tried to break too early. So what that can do is it can bring it back down to this level in here, usually right about here, and then pop it back up again. So that's what I'm seeing on this. If you go back through League of Traders, you'll actually see an example of that from this week, during the week this week. I think it was on the ES. Megaphone on a 60-minute here. Here again, this is what those shallow avalanches look like. And this is the type of thing that we could see happen on Netflix. So here, this is tricky because this was so fast up. Makes it really hard to continue with the break. And it makes this kind of more up in the air. I've seen these break both ways. Kind of got to go look at what's going on the intraday charts. Squish this up a little bit more. We call this the zone of pain, you guys. If we look at this for breakdown, you're basically looking at, I'll just start with the first one since that gives us like the furthest extension. Look at that. If that's like, you know, kind of cutting these in the middle, this would be the zone where if it's going to break down, it should have gone there. That's like the maximum. And then here's where the tighter one would have been. So we have this going out too far to support a good breakdown. My guess is that in here we could get a Phoenix continuation to go on the way back up, where it basically treats this like first correction, second correction, three lows, almost like a momentum reversal plus, but not really. So we've got like because it doesn't have like the lower low. So we've got a megaphone here. So that's what I would be looking at for the 60 minutes is to try to break out of that channel. It's not the best zone again, but intraday, that's the closest thing I'm seeing here. Let's see. Look at the pound. So this is a lot like what we saw in the morning here on the NQ with the way this pulled up and then back into around 11:45. So this is like the equivalent of 11:45 on the Nasdaq today. This pulled back a third of this last swing higher. That tells me this could go into a range again here. So if it was going to do 1, 2, 3, we would have seen a shorter pause here, more of a kneecap type of move. So this could go into a two-wave correction like that before it tries to continue. Look at the daily. Daily kind of has that same thing that I would be watching for intraday. So here, kind of that earlier break to a correction. So this has the potential to then go and basically treat this like a tilted cup with handle here. So that's what I would be looking at here on this one. I would have liked a little bit more of a blurb down here to kind of make that time development go out a little bit farther. It's trying to do that with the pause here though. What that means is that this correction here, this correction time is longer than the correction time we're seeing so far over here. So about the same amount of time would be about here. So I would have, again, liked to have seen this, kind of do something a little bit more down here before it tries to go, but it could do it with a base like a check mark too to get that going. But that would be the main thing that I would be looking at here on the euro pound. Pound dollar has that same issue with the really big move and then the range. So it's trying to do a two wave and that's going to give it a do or die spot. So let's actually put that on here so you guys can see what that looks like. So I'm going to go from the start to the low where it then starts to kind of develop that move to go up, but you could also look at it from where the momentum actually breaks up. So that's going to give us like two rectangles to pay attention to as far as the time development goes. So here's the first one, which would mean we might get some early setups right here as the start of the do or die zone right here. And then if we look at the comparison on, where the momentum really picked up, kind of out of that shallow or that tilted phoenix there, that would be the kind of the end of the trigger point. So if this can go and do, a check mark here into this zone right here, that can get that pulling up again. And it could even go and do it with a lot of strength. I would watch first for a measured move here to here, just because of all this congestion over here. So usually when these go really strongly, the pattern will be down here and then it will gain strength. But this is at midway on this daily pullback. So it's harder for that to gain as much strength. I mean, a good example of this is if we look at it on the smaller time frame. See here, the two little corrections right here? See how they're in the lower half of this pullback? That allows it to surge there. So the same pattern on a bigger scale is going to have a harder time really surging. But that's still going to be the do or die zone. So if it can't take off by here, it's going to go and break down. But that does mean we could be in for a longer trading range in here. in a check mark, do we need any order on V leg or should be same height or not? Okay, I didn't quite follow that, but what I'm looking at, like for a check mark, is it would like be like about that. So your first resistance would be here to here, but then you'd be looking from here to there as like a next potential extension there. Here to here is also a possibility, but I don't use that one as much. Got a check mark question. If it falls 50%, is that a do or die area? So if this falls, if you're looking at this, pull back 50%, ideally I want it to hold in that upper 50%. So you want to see this. In fact, the best ones are going to hold in that upper third, where most of your trading is going to be in that upper third. Your main risk becomes, does this turn into a head and shoulders? Now, since this bounced here a little bit faster than we would typically get for a head and shoulders, then it's not as likely. So if it rallies and stalls at 50%, you mean like here? So like if it pulls back here and stalls at 50%, is it as likely to do a check mark? That can have a harder time. I like it to come up about 2/3 and then do the base. Sorry, Harvey. You might have to show me a picture. You mean like if it goes here and then stalls here at 50% of this rally? It is it is like the first kind of resistance, but what you want to watch is if it bases out longer than like any kneecap in this first leg up here. So if it doesn't keep going with like a 1, 2, 3, that makes it harder. So you'll usually see a little pause at times, but you want it to do like a 1, 2, 3, and you want the momentum to stay the same. One happened like that yesterday. Okay, yeah, if you can show me that, then we can show them a good example of that. ES 5-minute kind of looks the same. I think I changed my, oh, here's the ES. Yeah, so the ES for like a check mark, it's kind of a really deep V for it, but you would see it hold here and then try to go there. It's really at a do or die point for trying to get the bulls to come back in here. You basically are looking at this as a two-wave correction. Since the two-wave correction didn't come down here, the odds of it surging out of it can be more difficult. So it has a greater chance of stalling at a 50% surge on the way up again. So see here how it doesn't just like surge there. It kind of just puts in like a measured move, but it's not even that guaranteed because it pulls back here, and then you kind of got that going on there. But this isn't a big drop though, so not really a equal comparison. Let me see if there's something I can show you. Had anything recent happening that's similar? Not really. Yeah, I don't see anything like that over there. All right, you guys. Well, thank you for joining me here today. So we're going to wrap on up, and I will get this posted over there on our YouTube channel so that you can go back and review it. And I'll see y'all in the forum. So have a wonderful rest of your trading day, you guys.